Hi guys, it's your boy Nice Henry once again. It's nice to have you guys on the charts again today. Um, Today I brought you another video, and then I got a lot of questions from a lot of people. They want me to talk about the peak formations, and today we're gonna be talking about peak formations. What are peak formations? Um, Before we start, I'm gonna have to go through a quick disclaimer. This video is not a financial advice, it's only an educational content, and I want you to treat it as such. Trading can be very risky. You can lose your whole capital in the course of trading, so be wise, do your due diligence before you decide to invest your money. Once again, I would like to um, advise you to join our free Discord and our free Telegram channel. The link is both on the description below, so just make sure you join so that you can be a part of the team. So right here from Millionaires FX, I want to welcome you to another video. Let's get started right away. So today we're going to be talking about peak formations. A lot of people ask questions about peak formations, so I want to talk about peak formations today. But meanwhile, before we talk about peak formations, I'm going to go do a quick review on the trades that we took in the course of the week, so that I want everybody to pay attention so that you can learn a thing or two from this trade and use it in your own trading as well. So let's dive right into it. So this week we were monitoring a lot of pairs. This week we monitored gold, Nasdaq, GBP, JPY, GBP, USD, Euro USD, and AUD USD. We traded a lot of USD pairs. We always do, because it's one of the most traded pairs out there. So right now, let's go through the gold. So I'm going to rush through the review so that we can have enough time to talk about other things, talk about peak formation, so that the whole idea is to make sure that the video is as short as possible. So on Monday, the price opened near the high of Friday, and it walked down to this level on Monday, and then they went into consolidation, peak formation, and from there the market reversed, and then we targeted this high from where the move started from, and we caught that nice trade. So that's 1:3.23. So and the next day, on Tuesday, the market went back to the high again, form an M pattern, and from there we took that sell and we rode it all the way down again. And on Wednesday, the market threw from the low again. The market cleared out the low on Tuesday, cleared out the low, and then went back again to test that low on Wednesday, and then from there we it moved to the high, but we didn't take that trade because we cannot catch every single move in the market. So but we got the reversal on that same day when the market decided to drop. From there we went into this is a triple top, and then we saw that the market retested the previous day high again, and then we took that trade, and then the market fell nicely. So on Thursday we had the news, the FOMC news, where the market took out both look at this, equal highs, liquidity created everywhere, equal highs everywhere was liquidity, below was liquidity. It was done intentionally on Monday, Tuesday, because of Wednesday, and on Wednesday everybody was taken out, even from Friday low. So nobody gets a free lunch. Everybody was taken out of this trade, and you can see how they took everybody out of this trade before the market decided to start falling. So the next day when we saw the breakdown, we took this short scalp, we traded it to the low, and from the low the market formed the W pattern, and then consolidation, and then worked its way back up. And then we didn't catch the initial move because I was kind of busy, but we caught the retracement, and then we traded it up to the high of Wednesday. So but on Friday we didn't take any trade because I was so busy with other things. So I was actually busy with my students, and we were having a lot of discussion. So let's go down to Nasdaq opened near the near the middle, from the middle, and walk its way to the low of Friday, and walk its way to this high. Look at the high, created the high. For when he created this high, he went back and he tested the high, and the price fell from there. We got that nice trade from Nasdaq. You can see all the way down. We caught that nice trade, we rode it all the way down, and the next day the market opened here the middle, walked its way back to the high again. We caught that trade, but the reversal trade during the news, we stayed away from that because it was very, very disastrous. We stayed away from the news, so the markets fell nicely. And then look at this one. The markets on Thursday, the market went into consolidation again near the resistance level there. We got that nice cap of 2.31 risk to reward. And on Friday, we caught this short scalp on Nasdaq again. I called this out on the inner circle. I called this out on the free Telegram and on the free Discord. A lot of people caught this trade. And on GBP JPY, we caught some trades on GBP JPY. You can see, I think only one trade. That was on okay. What day was that? Okay, is it GBP JPY? I think it was GBP USD. So okay, look at GBP USD. We got some nice trade on GBP USD. You can see that nice move there. You can see the nice move there. On Monday, the market opened near the low. Worked. We got that W pattern, and then it worked its way back to the top. Worked its way back to the top, and you can see that the next day the market opened near the high with a consolidation, and then we didn't get that move to the downside. But if we decided to trade that, we would have gotten that nice move to the downside, would have rolled it down. The next day the market went into consolidation, and from there it broke out. We took that trade, caught a nice 1:4.6 risk to reward ratio trade right there. And on Friday we also caught this trade from this on Thursday we caught this nice trade from this M pattern. So it was a nice trade there we caught right there on Thursday. And on Friday we didn't take any trade. We had a lot of great moves within the week. This week was better than last week. We caught a lot of great moves. On Euro USD too, we caught a lot of trades on Euro USD. You can see the trades like crazy. We got a lot of nice move on Monday. Same thing, because what I noticed is that this USD pairs, correlated pairs, they are always doing the same thing. Most times you can see that they are always doing the same thing. You can see how the market worked its way on Monday. It came down to this it didn't work its way all the way down, but when I saw this consolidation and then a breakout to the upside, I waited for this consolidation to break, and then we took that trade. We targeted this high, and you can see we make that 1:5 risk to reward trade right there. And then the next day we break the high, consolidation, peak formation, and the market fell back to the low. We targeted the low and we hit it, our take profit without stress. And then the next day we got, that was on Thursday, we got this when the market formed this head and shoulder around this support become resistance. We took that sell and we got that nice trade. And on Friday we got this nice scalp and targeted the low. So that's it. Okay, that was on Thursday. And then on Friday we didn't take any trades. So same thing happened even on AUD USD. Same thing happened. So guys, that's it. So on AUD USD we caught a nice trade on Monday. Look at it, came down, worked its way to the low of Friday, from and consolidated there. We took that trade and then we targeted the high, and then from there the next day we targeted the low again, caught a nice 1:3.44 risk to reward ratio trade right there. And on Thursday, I think on Thursday we caught this nice trade. Look at this trade, this bad move here. We caught this nice move there. We targeted the high, but when we got to this point, it started forming a W pattern, an M pattern, sorry, and then the market reversed from there. But we caught a nice almost 1:5 risk to reward ratio trade right there. But on Friday we didn't take any trade because we've had a lot of great trade within the week. It was awesome. So but today we're going to be talking about peak formations, and the beauty of peak formation. And what is peak formation? Some people ask me what is peak formation. So we're going to look at peak formations with respect to our trading technique, which is majorly pump and dump, trade continuation trade, bearing in mind, taking into consideration the opening and closing opening and closing price of the previous day, weekly high and low, and then daily previous day high and low also. So let's go straight into it. So what's peak formations? People ask me this question: what's peak formation? Peak formation is a consolidation. You see, there's something people don't understand. That's whatever happens on the higher time frame before the pattern is complete on the higher time frame. It begins from the lower time frame. So what is peak formation? Peak formation is where the market decides to go into consolidation. It is what we see before a reversal. The easiest and the most common peak formations you can find is an M or W pattern. So when you see an M or W pattern, it means a reversal pattern. A consolidation most times is also a reversal, but a consolidation can happen before a reversal or a trend continuation. Okay, because the market actually trends only 30% of the time. The market is in consolidation 70% of the time. So when the market is trending, you need to know that this market is trending. Okay, and when the market is not trending, you need to know that the market is resting. So the market can either be trending or be in consolidation. When the market is in consolidation, it's accumulating more energy to continue the movement, either to a continuation or a reversal. So most times when we see a peak formation can otherwise be called a reversal, a consolidation. Sorry, a peak formation can be called a consolidation. Let's go right into the chart. Let me show you examples of peak formations. For instance, now let me give you an illustration. The market is trending higher, higher high. Okay, all of a sudden the market, instead of continuing the movement to the upside, the market is now consolidating. Now at this point you have your peak formation. If the market breaks out, that means at this point it is accumulating energy. If the market breaks to the upside, and retests this level, we are taking the buy trade. We believe that the market, it was a good trade we took. I think that was 2 weeks ago. That's happened like this. It was a trend continuation trade. So after the consolidation, market broke out to the upside and continued the move. Why sometimes you see something like this, the market continues to trend, and then it goes into consolidation, you understand, and then break the structure, only for the market to begin to go back down to the downside. This is our peak formation. So you must understand the peak formation. The common type of peak formation you can find is an M or W pattern. That's the easiest part. Now, what's a peak formation? A peak formation on the 15 minutes means a swing point on the 4 hours. So if you see something like this, this is an M pattern on the 15 minutes. This is an M pattern on the 15 minutes. But if you get like a consolidation on the 4 hours, or maybe something like this, this is when you get a consolidation. Okay, let me explain it again. Now, when you get a consolidation, instead of this, you get this. You get something like this. So this is what we call peak formation, because that's a consolidation. This is a consolidation. It's not every time that the market does this, very sharp this thing. Most of the time the market will do a consolidation, because if they do an M or W pattern every time, a sharp one every time, it is easy for traders to recognize. That means everybody's going to be a millionaire, a billionaire trader. Okay, so what they do is sometimes they give you an M pattern or a W pattern. Sometimes they give you a triple top, okay, or triple bottom. Sometimes they give you a consolidation. They consolidate more before they continue the movement, either to the upside or the downside. So you need to understand that. So let's go right into the chart and identify peak formations. What's our peak formations? For instance, this is a trade of Nasdaq. This was the trade we took on Nasdaq on Thursday. You can see this peak formation. This is a peak formation. Okay guys, this is a peak formation. This is a consolidation. So when I see the peak formation, that is a peak formation, when I saw the rejection to the upside and then a bearish engulfer with momentum, that was when I got into the trade. So guys, this is a peak formation. This is a peak formation also. You can see this is basically the backbone of our trading. This is the backbone of our trading. We're always looking for peak formations to trade from. We had a lot of peak formation on gold. Look at gold. We had a lot of peak formations on gold. Look at gold. Look at gold. Peak formation on Wednesday. Look at on Monday. We had a peak formation. Sometimes they just give you a W pattern, very clear one. Sometimes they give you, they cannot just give you the same pattern over and over again. But the truth is that the same thing, the same template, same thing happens over and over again. Okay guys, same thing is still happening. Same thing is happening over and over again. So you need to pay attention, guys. So look at the consolidation and then the market moves. Here they give you an M pattern. Here they give you a consolidation. But same thing, same process. Here they give you a triple top. So they cannot give you something that is very easy to understand every time, same pattern every time. They're going to give you different variations, but in the end it's still the same thing happening in the market. You just need to understand and follow the process, follow the trading rules, follow the strategy. It works. Okay guys, it works. So just follow the strategy, follow the rules, follow the trading plan. Be patient and wait for the trade to come to you. Okay guys, be patient and wait for the trade to come to you. Look at this peak formation here on Friday. Look at this peak formation. It happens all over the time frame, on every time frame. So immediately the market breaks out of the peak, it begins to trend, because we know that most of the time the market is in consolidation. We don't want to trend when the market is in consolidation, because that is the easiest place for you to lose money. Okay guys, so you want to trade like somebody who knows what he is doing. You want to trade like a professional. You want to trade like a profitable trader, like a sniper. Okay, when you're trading, you are patient. You are waiting for the market to do what you want it to do. If it doesn't do it, you stay away. Okay guys, you can see this. You can see it happen, the peak formation again on GBP USD on Monday. Look at this trade. So it started with a W pattern, and when it got to the high, it cannot give you an M pattern. It's going to be too obvious for everybody to identify, to recognize it. So what they do is to give you a consolidation instead, or you can call this a triple top. So, and then the market fell from there and it went into consolidation, and the next day the market went into consolidation again. This is a peak formation. A peak formation can actually happen before a reversal or before a continuation. This is a peak formation that happened before a continuation to the downside. So guys, you just need to pay attention. If you also pay attention here, you can also see this one also. This was peak formation also, which would have given you a nice trade to the upside for you to catch that great move. But like I said, we cannot catch every move in the market. We only do what we can. So but so far the week was great. The trade was good. We made money, and we are so happy at the end of the day. So guys, I want to let you understand that you need to follow your trading plan. You need to follow the plan of what you are doing. Do not deviate. That's what brings about failure. Follow the plan. Mark up the levels. Follow the levels. If you've not watched my videos, go back to my previous videos. You're going to learn a lot from my videos. You're going to learn a lot. So peak formations are places where you can get continuation or reversal from. Peak formation are mainly consolidation. That's where the market breathes. That's where the market rests, collects more orders before the move, continuation or reversal begins. Okay, so guys, that's peak formation. That's the peak formation. The market always have a peak. When it begins to trend, it gets a peak, it gets to a peak, and then it comes back, or it continues the trend depending on the decision or the plan of the big money, the smart money. They are the ones who move the market. So these are the levels they are looking at. There are levels they are looking at in the market to move the market from. You need to pay attention to those levels too if you want to be a consistently profitable trader. You want to pay attention to the levels they are looking at so that you too can be able to make money out of this market. So guys, I want to wish you a great trading week next week. I hope that your trading week come true. Join our free telegram if you don't if you are finding it difficult to find consistency trading like this. This is the finest trading academy you can find anywhere in the world. We have live session every day where we analyze the chart with all our students and make sure that everybody is profitable. The goal is to make sure that everybody is profitable. When you are profitable, I am profitable. So my goal is to make sure that you're profitable. I love you and I want you to succeed. So guys, I'll see you next week. Make sure you subscribe if you've not subscribed to our channel. Make sure you click the like button, drop a comment. I'm going to respond to it when I can, and try to make sure you join our free telegram and discord. I'll see you next week with another video. Have a nice day. Peace out.